Okay, guys, I'm going to try to make this recording really quickly. Still battling COVID, still not 100%. So I want to go over the trade that I took first, and then I'll go into the overall market and the technicals that I see on the SPY and a couple of other things with the treasury bonds. So right here, this wasn't me just being patient the whole day, waiting for it to come down to this key level. And this is the micro E-mini. It follows the S&P 500. It's the futures. And, basically the trend was going down the whole day. Now, I was not available during this whole part of the day. Happened to get to the screens, hit up our Discord, started to feel a little bit better here after 12 o'clock and saw a pretty good opportunity for this break and retest of this 39.50. Now, it went a little bit over it. That's fine. That's why we have stop losses. As long as your risk to reward is there, and mine obviously was, and I left a lot on the table here as the market is currently at low of day. So making this video right now, it would have been nice to sit and hold this, but got out on this candle. So not bad. I was waiting for this break of this, wanting to see if it broke. It broke and then came back up. The whole point of this trade was just to take it back to previous lows. All right, the low of the day, which was at 39.45. So getting the bounce up, I wanted to just take profit right back into that level. Gave me a tiny little winner, 25 bucks, one trade, not so bad. All right. Now, I want to show you guys some interesting things right now and why the market is selling off. Now, you might hear a lot of things in the news about, why the market's doing this, why it's doing that. The bottom line is the market, it is just based on those waves, those trends, the emotions of all the market participants. And that is what builds a market. Now, I definitely suggest not believing every single thing you hear on CNBC. Going over to the daily chart, and I'm going to pull up the daily chart for the S&P 500. I like to look at the SPY. That gives me a clear view of what the market has done for the past year. What have we done for the past year? We've hit this trend line once, twice, 3 times, and then most recently last week hit it for a 4th time, and we're now pulling all the way back. A rejection at that trend line. This 4,100 level on the S&P 500, 410 on SPY. It hit it to the penny and then sold off. We then broke during the trading day today the 20 EMA. This trend line. This all gave me a very nice downside trade to this particular level right here that we've seen buying happen in the past. So we'll see if that holds up. If this 392.85 doesn't hold, maybe 390 would be next. So that's just the overall, as we were coming up here, you heard everybody talking about, how bullish they are for the year-end rally and all this other nonsense. And then Powell speaks, and you get this amazing day. Everybody's just buying. And then everything gets turned upside down, and then they have to explain themselves of why the market is doing that. It's doing that because we're in a technical market. This whole year has been nothing but perfect technicals. Look at this perfect trend right here. All right, it's very easy to see. You want to see what it looks like in the inverse? You put a minus sign in front of the SPY, and this is making higher highs and higher lows. A very nice trend, right? Trending from the left, bottom left, to the top right. And that's just the inverse look on the SPY, doing the same thing here, but going top left to bottom right. And we were right to that trend line. So you saw that bounce. This is what I'm talking about with the waves, right? You get a wave, you pull back, another wave, pull back. Sentiment gets so low, there's no more selling. And then the buying comes back in. There's no more buying. The market, recession, blah, blah. It hits a trend line and comes on back. All right, so that's the SPY. Now, I want to show you guys something. This curve inversion is a real thing. The 3-month and the 10-year interest rate yield, every time the 3-month yields more than the 10-year, which is very, very rare. You can see here, it only happens right before a recession. All right, and it usually takes place quite a big distance before a recession starts. So, we started to break this line here. This is a little old. This is from October 26th. We're even further down now on this. And then coming back over to here, seeing what the bonds are doing today, just take a look. You can just see how much this is definitely inverting, this yield curve, just with a huge, huge inversion here. You have, this is the 3-month, this is what we were just looking at, and then you have the 10-year at 3.55. This is a very big curve inversion. So you have the longer dated treasury yields, treasury bonds here, yielding less than the shorter dated treasury bonds. That's just suggesting that a recession, the bond market is pricing in that recession possibility. All right, so that's basically it. I'm going to cut the video here as it's kind of a struggle to talk. Hit the thumbs up for the video. I'll see you on the next one.